The only way you stop the evisceration and destruction of the U.S. dollar is to raise the federal funds rate from zero bound over 7%, 750 basis points, call it. And can you only imagine what happens to the stock and the bond and the real estate market at between 7 and 8% interest? And that's why when they tell us they're going to get tough on inflation and you're going to see 4 upwards of 8 rate hikes over the next 2 years, to get to 2%, you're spitting in the ocean. It does no good. You're still negative 5%. Real rate.
Welcome to Inside the Markets, flagship podcast, StockPulse.com. Joining me today to talk about the precious metals markets, owner-operator of Miles Franklin, Andy Schectman. Andy, thanks for taking the time here. It's been some time. Happy New Year, I guess. It's been, a while since we've reconnected here. I figured inflation up here. What better guy to kind of give me the inside baseball and what's going on in the precious metals markets on the dealings here. So I guess let's start with the environment. Looks pretty good. How's business for Andy Schectman and Miles Franklin?
The business has been spectacular for the past 2 years, and I think that there are a lot of people who have really been seeing this coming. I mean, if you don't have to go any further than 2019, and you can see to the lengths that they had gone to bail out the banks in the overnight repo market. And it's interesting. We were told once the Freedom of Information Act, courtesy of the Levy Financial Institute, just came out here recently, that showed back all the way in 2008, the creation of the Tea Party came as a result of the $700 billion TARP program, the $700 billion infrastructure program, on top of $3 trillion going to the bank. So all in, we were told $5 trillion. The Fed sealed those records for 2 years and then decided that it was such damning information that the public couldn't handle it. They sealed it for another 10. The Levy Economic Institute, through FOIA, Freedom of Information Act, challenged the Fed all the way to the Supreme Court, where it was released, only to find out that $29 trillion had been given to the banks and various banks and companies around the globe, and spreading inflation, not just here at home, but literally sowing the seeds of inflation across the entire planet. And when you realize all of this predates the crazy spending on COVID, where you get assertions like 50% of every dollar ever created in the history of this country was done in the last 2 years, you begin to realize that the Fed and their policies have created inflation unlike anything this country has ever seen. And when you realize, Rob, that they've painted themselves into a corner, and I think a lot of our clients do, from listening to guys like you and so many other people out there who have been saying, look, they're painted into a corner. Where can they go? When you inject that kind of money into the system, you're talking Weimar Republic type of money into the system. And where the real inflation has gone as a result, thanks to the low interest rates and all of this injection of stimulus, has been into financial assets. That's where the real inflation is. This is that K-shape that people talk about, where the wealthy have gotten wealthier exponentially so as their assets have increased, and the poor are finding it harder to put food on the table, as food and energy and housing, ironically, 3 things not counted in the CPI, have gone to the moon. And when you look at a CPI print of 7%, which excludes those things like food, energy, and housing, and you look at the real numbers, we're at roughly 15%. So why is the Fed painting themselves into a corner, Rob? Because you have a inversely correlated situation where stocks and bonds and real estate, all at all-time highs, courtesy of this make-believe Alice in Wonderland environment that the Fed has given us, is inversely correlated to a rise in interest rates. But now you have inflation, which they told us they would always strive for 2%, which was always crap, running at 7%, but doesn't even paint the real picture. John Williams of Shadow Stats, who does nothing other than show us the way the numbers were calculated in 1980, will tell us that inflation is closer to 15%. But let's just play with their 7% number. The only way you make this stop, the only way you stop the evisceration and destruction of the U.S. dollar is to raise the federal funds rate from zero bound over 7%, 750 basis points, call it. And can you only imagine what happens to the stock and the bond and the real estate market at between 7 and 8% interest? And that's why when they tell us they're going to get tough on inflation and you're going to see 4 upwards of 8 rate hikes over the next 2 years to get to 2%, you're spitting in the ocean. It does no good. You're still negative 5% real rate. And when you realize that the only way to get tough on this is to raise the rates above the stated rate of inflation, you also then realize subsequently that you destroy the markets, which have reached levels of irrationality, that's a word, that we've never seen. And this is, in Austrian economics, what they refer to as the crack up boom, where through misallocation of resources and capital, you see these crazy distortions in price. But we ain't seen nothing yet, because at some point, the public will realize and the masses will realize that the Fed has lost control. And that's when you see the bond market implode. And that's when you see that pull the stock market down with it, just completely kneecapping it, and the real estate market. In other words, it's my feeling that the Fed is going to sacrifice the dollar. They're not going to get inordinately tough on inflation, just tough enough to rattle the bushes real good. They'll come back in, they'll sacrifice the dollar, they'll pump more money into the system. And it's at this moment that the world will realize that the Fed is screwed and that they really can't do anything. They've been rendered neutered. Well, they haven't lost control yet, and they're certainly not going to let the markets implode on their watch. But my feeling is that they'll reach that moment. We'll cross that moment, that line in the sand, that Rubicon, where the world realizes that Fed's out of options. People who listen to you and to me know that they probably already are, but the world doesn't realize it yet. And we're not too far away from that. And as a result, I think you're seeing record volume in precious metals. What we are also seeing at the same time, though, is a lot of people have jumped on the silver bandwagon over the last year and a half, thanks to the silver squeeze and Wall Street Silver and all those folks. But they don't have the strong hands necessary to endure this market. They haven't been around long enough to realize that this market is so heavily manipulated that they're weak hands. And I think that's part of the reason that you're not seeing the metal perform quite the way that we would expect it to, on top of the overt manipulation. We're beginning to see, I think, slowly the realization that Fed and the government views gold and silver as the canary in the gold mine. And maybe some of these people who bought gold and silver to get wealthy are slowly realizing that it's kind of the kryptonite to the whole system. And let's just hope that their grip gets tighter. But in general, what I will say to you is that there's no secondary market, that getting product has never been as hard as it has for me in 32 years, ever. And I think we're entering an environment where this market will be defined by the inability to source product. And we're not there yet, but it's way harder and way more expensive than it's ever been in my entire career. And I've been saying this for over a year, and it just recently has really become difficult to find product. So I know that's a long-winded answer to a very short question, but I just wanted to paint a picture that the environment dictates diversification out of the dollar into precious metals. And we've seen a lot of that over the last 2 years. And I think we're also seeing a period of time where it's going to be really hard to continue to add product that we take for granted right now. I think it'll be the biggest challenge that we face as a company in 2022.
Yeah, you paint quite a picture there, Andy. So inflation here to stay. Can the Fed make a move? Debatable. Doesn't seem likely. Too many things would break. I'm sure we could probably get into discussions on what would break and when and what that looks like. But let's get into giving a little advice here to a man who's paid himself in precious metals for some time now. This is nothing that you haven't probably expected. So let's give some of your worldly advice to investors. What would be what should be a good game plan here moving forward?
I think you do it the way that the biggest money in the world is doing. We saw in January 26-ton reduction in gold storage out of the LBMA and the Bank of England. We saw over 600 tons of silver taken out. These are by big dollars, strong hands, and they're taking it out of the LBMA to not further drain the COMEX, which they've been doing adequately for the past few years, and pulling metal out of the back of the ETFs, which side up reporting requirements so that they end up taking possession of metal, de-dollarizing in a very private fashion. I have been saying for a very long time that misdirection is what is being thrown at us. It's, like the book, The Art of War, I've talked about quite a bit, where, this is a book that's taught in every major military academy. Well, at West Point, as an example, it's mandatory reading. It's mandatory reading at CIA. It's taught at most major business schools on corporate hierarchy, and it's taught in most major law schools on formulating arguments. And it's a very pervasive book and around the globe. And I think that's exactly what is happening. We're seeing misdirection with price and rhetoric, and the biggest money in the world for the past 5-6 years has been de-dollarizing and taking possession of gold and silver because they don't view it as an investment. That's mistake number one. It should be viewed as wealth. And I think that's where the people went astray that have come into this market late as a result of all of the hype and hyperbole surrounding Wall Street silver and whatnot. And I think you view it as wealth. And I have been, as you mentioned, paying myself in silver since 1989 when we started this company. Promised to my father when we started it is every 2 weeks I'll buy something. Regardless of how much or what it is, I will buy something with every paycheck every 2 weeks. And I've honored that promise for going on 33 years. And to me, it's wealth. And I think to the big banks and the big central banks and the sovereign wealth funds and the family offices who are accumulating massive amounts of it kind of in the cover of darkness because price is allowing them to do this through misdirection by the big commercial banks and by the central banks who are trying to keep us all happy and stupid in paper. These people realize it's wealth. And that's exactly what it is and how it should be viewed. It shouldn't be viewed as an investment. There are a million other investments out there these days that can make you rich. Making money is one thing. Keeping it is next to impossible these days. And I think ultimately that's what gold and silver will represent for the people who are smart enough to have built a core position in it. Immutable wealth that no matter what happens will be worth something in the year 3000, long after the bills in our wallet are hanging from a frame in the Smithsonian.
Yeah, let's get into the metals a little bit here and talk about the gold silver ratio. It was 125 to 1, now floating around that 80 to 1 level. Where should that number be? I mean, obviously 16 to 1 back in the day, I've heard that debated on how that should have never been a thing. I think you'd probably take the counter side to that, but how do you see that shaking out this year?
I look at silver as the most undervalued asset on the planet, largely because of this ratio. And it's interesting. I asked Keith Neumeyer pretty much that same question on an interview I did with him December 2021. And he said to me, and at the time, Rob, the ratio was about 85 to 1. Now, to put that in context, 125 to 1 that you speak of in March 2020 was the greatest disparity in human history ever. At 85 to 1, we've only been there a few times in human history. Where we are right now, if you Google gold silver ratio last 100 years, you'll see a chart that'll pop right up. And I tell people, look at where we are at 80 to 1. Take a piece of paper and put it and look underneath it and look above it. And you'll see that above anywhere in this area represents the most minute amount of time on the last 150 years. Like the tiniest bit. We're in rarefied air. Most of the action you'll see below it down here, where it's averaged over the last 150 years, somewhere in the neighborhood of 42 to 45 to 1. So that's been the average. But I asked Keith, I said, Keith, and for those out there who don't know who he is, I'm sure most of your listeners do. He is the CEO of First Majestic Silver, one of the most well-known silver mining companies in the world. And I said, what do you think of this gold silver ratio at 85 to 1? It was kind of a softball question. I figured he'd, just drill it. But his answer shocked me, actually. He says, Andy, I don't think about it ever. I said, wow, well, why not? He says, well, because what I think about is the mining ratio. And the mining ratio globally is 7 to 1 right now. In other words, you have 85 to 1 price ratio, but it's coming out of the ground at 7 to 1. And what makes that more stark, Rob, is the term epithermal, which means found close to the surface. Silver is found in nature in a form called epithermal. It's very near the surface. The big deposits were found decades ago, long before the advent of advanced imagery. And when you talk about who's pulling the metal out of the ground, only 30% of all the silver that is mined in the world comes from primary mining companies like First Majestic. 70% of it comes from companies mining things like copper and gold and other metals, and they stumble across some silver. So you have, of 800 million ounces, roughly, that is mined each year, only roughly 240 to 50 million comes from primary silver miners. You have an asset, a commodity that has duality in demand at the same time. So not only is it depleting in nature, the big deposits found a long time ago, the primary miners only responsible for 30%. The fact that it's coming out of the ground globally at a 7-to-1 ratio, even though it's priced at 80-to-1, you have things like duality in demand, where most commodities have one demand source. Like copper is primarily used in industry, and gold primarily used in monetary, as a monetary instrument. But silver, you have both a green and digital world advancing to the green and digital world that we find ourselves in, and then of course the renaissance over the past 2 years in its monetary applications, giving it demand from two sides of the aisle, where the hedge fund traders could very quickly start fist fighting with the large industrials like Samsung and Sony and all the auto manufacturers who are going completely battery powered, away from the combustion engine by 2030. The majority of the auto manufacturers are. So you're entering a period of time where the industrial applications alone for silver should eat up the majority of the 800 million ounces mined each year, let alone the realization that the dollar is in trouble. All currencies are in trouble. This isn't just a US-based phenomenon. You're seeing gold and silver being voraciously accumulated globally. And so you have a situation that starts out as a trickle of demand that runs to an all-out sprint as currencies and markets start to contract and or crumble in the face of monetary policy that is probably way too little and way too late globally. So I don't know. I think when you talk about, and I try to be objective, Rob, I know I sell precious metals, have for 32 years, but I buy it and I own it myself constantly. And I try to be objective. Honest to God, I do. I mean, poke holes in this if you can. I do not see an asset on the planet that has a better supply-demand setup, a better fundamentally strong argument with where supply is being diminished, demand is being accentuated, not only in industrial applications, but monetary as well. The big deposits found a long time ago. In any way you look at it, I think for people looking for value, for people looking for upside potential, for people looking for an escape from the dollar, one of the few assets that will survive as markets crumble in the face of rising interest rates. I mean, I can't see a better place to put your money than silver. So where does it go? I don't know where it goes, but the first time I ever noticed this was 2010. And that's when I started doing podcasts, and with 85-to-1. And I looked at that chart, I'm like, my God, this was like the second time in human history it's been this high. So I started getting online and doing these podcasts, and I told everyone, sell your gold right now at 85-to-1, move to silver right now. And within 8 months, it was 37-to-1 with $50 silver and $1,915 gold. So in 8 months, it went from 85 to 37. Anyone who would have made that switch out of gold at 85-to-1 and back into gold at 37-to-1, not quite, but almost tripled what they started with. Call it 2.5 times after taxes. 2.5 times what you started with by switching from gold to silver and back to gold, as that ratio went from way overvalued to just past its historical average. And even at 37-to-1, which is just below its 150-year average, remember, for thousands of years, it was 16-to-1, and it's coming out of the ground right now at 7-to-1. You could make the argument, and it would be well-founded, not only that silver is roughly 11 times undervalued in its relationship to gold, but if you take $1,850 or $1,830 and divide it by 7 right now, you're at $261. If you said to me right now, Andy, tomorrow morning silver is going to be $261, does that sound stupid to you? I'd say it sounds a little aggressive, but geologically, it's right on the money. That is the geologic price right now. If you take 1830 and divide it by 7, that's what's coming out of the ground. And whether or not you believe gold is properly valued. Divide it by 7, you're at 260. Could silver get to these levels? Hell yeah, why not? But I would start thinking of switching back to gold. I'd think about it as we approach the 40 range, or get closer to a double. But, ultimately, there are a lot of people, Rob, who think it can go 1-to-1. So don't know if that'll happen, but 7-to-1 wouldn't be outlandish. That's the geologic ratio right now. That is what is coming out of the ground.
When will the central banks come running here, fight for gold, or maybe you could argue they already have?
Yeah, I can make that argument, Rob. In 2017, the German Bundesbank told the Federal Reserve that they want all their gold back, which was a very unusual request in the respect that, banks had been net sellers of gold, the central banks, up to that point. And we were at that point in the midst of a 6-year bear market in gold. And all of a sudden the Bundesbank said, we want all our gold back. And within a few weeks of that happening, you had the Bank of Austria, the Dutch National Bank, Bank of Poland, Bank of Hungary, Bank of Turkey. All these European banks said, we want our gold back too, not just from the New York Fed, but from the Bank of England as well. We find out the following year in 2018, those same banks bought more gold as a group than they did in the previous 60 years combined. We find that next year in 2019, those numbers are up nearly 100% as the banks continue to purchase gold. And then we see the Bank of International Settlements come out and classify gold as a riskless asset, basically a tier 1 reserve asset. And there's only been US dollars and treasuries in that level that have been considered riskless, or tier 1. So in 2020, that trend continued as central banks, including China and Russia and India, continue massive acquisition of gold. Here in 2021, we Serbia and just a million banks. I don't have the numbers in front of me, but all of the big central banks are really accumulating copious amounts of gold. And so, I don't know that we can make the argument that they're all running to it right now. But what I will say to you is that since 2017, there has been a very large push for many of the world's central banks to accumulate gold. And obviously pale in comparison to what Russia, China, and India have been doing, but all of them have been accumulating, all of them, big and small. And that speaks of de-dollarization to me. In fact, Russia, for the first time in I don't know how long, publicly came out and said they own more gold in their reserves than they do US dollars. And so I think that if you are looking to protect yourself against an event, it appears that's what they're doing. They have been de-dollarizing quietly, exiting stage left quietly into precious metals for several years now, using the manipulated price by the COMEX to run cover for their acquisitions. And so I would simply say to you that there is more central bank accumulation than meets the eye. It's just that the massive amount of money that has been created and the ability to rig the market by a handful of commercial banks that want to make the dollar seem better than it is has been enabled a lot of these big institutions and these big central banks to quietly accumulate gold and repatriate it from the Fed and the Bank of England, while everyone is fixated on cryptocurrencies and equities that have reached all-time highs, thanks to a massive infusion of money into the system created out of nothing. And you want to talk about distortions and misallocations and anomalies in price. That's what we have, in my opinion. And as this malinvestment has to work its way out of the system and correct, and you see a deflating of all of these assets. In a bear market, he who loses least wins. And we haven't experienced that for a very long time, but I think before it's all said and done, we will. And I think this is why you see the central banks quietly accumulating it. It may become a little bit more in your face when the shit hits the fan, but I will say that since 2017, really quietly, the European central banks and the Asian central banks and many in the Middle East have been leading the way in de-dollarization.
Yeah, Andy, in closing here, let's talk about Miles Franklin a bit here. You've obviously practiced what you preach. You're certainly objective, but this is your belief system. So, for those who want to partake in that type of belief system here and own the physical metals here, you have an impeccable reputation here in the market. So, why don't you tell people about that?
Appreciate you saying that, Rob, very much. Well, we've been in business for 32 years. We've never had a customer complaint. We're A+ rated with the BBB. We're one of only 24 companies ever approved as an authorized reseller of the U.S. Mint by the U.S. Mint. We're really proud of our reputation, but the state of Minnesota, my home state, although I don't live there anymore, I moved to Florida. We left our corporate office there because it's the only state in America that holds precious metals companies to a higher standard. Most of the companies in the United States, I'd say 99.5% of them or more, just won't do business in the state. They would need to be beholden to the Commissioner of Commerce the way we are, namely with background checks every year of everyone in the company, myself included, all principals, all employees. If there's a felony related to financial services, you are forever disqualified from the industry. Continuing education and compliance, licensing and bonding, which is the big one, we're held to the same standards that a brokerage is. And it is very unusual. It's the only state in America that does that. It is a federally non-regulated industry. It holds us to the highest standard in the industry. So from a standpoint of reputation and accreditation between the U.S. Mint, our worldwide exclusives with Brinks and the state of Minnesota, you could not work with a safer company. With that being said, we are building a website. We've been doing it for a while. We have problems. The back end is now built. We're working on the front end. We have a website that does not allow for online purchasing, but we will be as competitive as anyone in the United States. We will match or beat just about any price in the United States. And we work with you old school. In a digital world, there's something comforting, in my opinion, about being analog with your precious metals. We will work with you. We will make it a good experience. We will answer your questions. We pride ourselves at accountability and accessibility. So you can send us an email at info@milesfranklin with any questions. We'll send you an updated price list. One of our brokers or myself will return the email and contact you. And we will walk you through the steps and make sure it's a good experience, one with accountability, one where you're not going to get screwed, where you won't be our first customer complaint. And we will indeed give you a very, very, very good price, usually the best in the industry, and with it, personalized customer service. So again, that's info@milesfranklin, and certainly just really appreciate being here, Rob, and hope to see you at your show in August and come back on your show as requested to talk about what's going on in this crazy world that seems to be getting exponentially crazier by the day.
Absolutely. And yeah, I look forward to that. And certainly mention StockPulse when you call Andy, and he'll take a little better care of you. And again, yeah, we'll look forward to seeing you, and we'll have you back up here and see how these markets shake out. So again, Andy Schectman, owner operator of Miles Franklin. Appreciate you taking the time, Andy.
Yeah, that's an important point. I'm sorry, I was remiss in saying that. You definitely want to put StockPulse in the subject line. We'll make sure that you're getting the service and the price that you would want, Rob, or your listeners are. And that would be great. And again, thanks for having me. I will look forward to coming back and seeing you in person in a few months.